Hello, and a very warm welcome to this webinar. European banks need to prepare more and worry less about a digital euro, brought to you by Scope Ratings. My name is Keith Mullin, and it's my pleasure to be your moderator for today's session. Now, the prospect of a digital euro, although not certain at this stage, has created some anxiety at European banks about the stability of deposits, high implementation costs, and other factors. Are those concerns warranted or perhaps misunderstood? To answer these questions, I'm delighted to be joined today by Sam Theodore, a senior consultant at Scope Group. In a moment, Sam will outline his thoughts, and after that, we'll be delighted to take your questions. So please do type these into the questions tab, and we will do our best to answer them. And before I hand over, just wanted to mention that Sam did cover this topic in his most recent The Wide Angle publication. This is available on the Scope Ratings website, but for convenience, we'll make it available for download at the end of today's session. So that's it from me. Sam, great to see you. Let me hand the floor over to you.
Yeah, so what I wanted to do today is not to give a general introduction like a course in digital currencies, because that would be too long and probably too boring and repetitive, but I wanted to relate my remarks on the digital euro, hypothetical digital euro, to what the bank's concerns are and if they are justified or not, because as I'll try to explain here, the ECB did address most of these concerns already in its first stage of investigation. So basically, the ECB last November stated that it concluded its first stage in the possible implementation of the digital euro investigation phase, which started in June 2021. And moved into the second stage, that of preparation, which is going to take another 2 years. So assuming towards the end of next year, they'll close this phase of preparation, and if all the red buttons on the legal side, the economic side, the political side, the institutional side will be clicked and approved, then the project of the central bank digital currency into the next phase, that of preparation. We are not there yet. There's still a lot of question marks. But nevertheless, we can see what the landscape will be. So basically, this digital euro is a project which will allow transactions in digital euros issued directly by the central bank, by the ECB and the euro system in the 20-country eurozone, and this transaction will be free. There's not going to be any fee attached to them. Will be highly protected. Privacy of the end users will be highly protected. That's what the ECB has stated, and there's no reason not to believe that. The digital euro will be inclusive, meaning that everybody will have access to digital euros, including those people without bank accounts, although this is more like a theoretical point, because as we know, in Europe, as opposed to other regions of the world, most people already have a bank account. And very importantly, the settlement will be instant in digital euro payments. So there's going to be, there are probably going to be two types of digital euros, retail and wholesale. Retail for the use of individuals and businesses within the Eurozone, and wholesale for payments in euro, in digital euros globally, across border. The digital version of the euro will continue to exist in parallel with the cash version, of course, and with the other electronic payment avenues, private avenues like Apple Pay, Visa, MasterCard, and a new digital wallet, which will probably be launched this summer, through the European Payments Initiative of 15 large Eurozone banks, primarily from France, Germany, and Benelux and Spain. And again, as I mentioned about privacy, very importantly, the ECB will not have the ability to identify the end users of these transactions. A very important element in my mind is the fact that what is planned is for the creation of a digital euro-specific payment platform infrastructure, which is going to be across the 20 countries of the Eurozone. So it's going to be the first genuine, i.e. not genuine European, i.e. not owned by foreign companies, payment platform in Europe. And in time, the ECB says that banks and other payment service providers, and I'll get to this term in a few minutes, will be able, in addition to loading transaction in digital euros, will be able to load their own products and services to be offered to their clients and also to other clients. Of course, the same facility will exist for these banks' competitors. Now, banks, to some extent, are not very comfortable with the idea of a digital euro. Why? Because they fear that by creating digital euro accounts, direct liability of the central bank, people will move away from bank deposits. So banks will see some degree of deposit disintermediation, which means, as they claim, that they'll be less able to make loans to support economies. This debate, these concerns were part of the investigation stage of the digital euro. I think the European Banking Federation published a few papers about that. And the main concern was about deposit disintermediation, especially in a state of crisis when the banks remember, people, funds left the bank's balance sheets. And also concerns about the fact that the high cost of implementing the digital euro infrastructure, if charged to banks, or if banks would be asked to adjust their systems to this new infrastructure, that will impact their revenues and profitability. The way the ECB addressed these concerns, and I mentioned here 4 elements, which to me are very important. The first one is the fact that there's going to be a cap of individual holdings of digital euro accounts. The number that I have seen most often recently is 3,000 euros. It could be more, it could be less. I don't think it's going to be more, but it could be less. The final number will be decided closer to implementation in function of the existing of the financial and economic conditions existing at the time. So we're not there yet. So I'm talking here about individual holdings. As per business holdings, the cap will be 0. So in other words, businesses like e-commerce companies, merchants, will not be allowed to have digital euro accounts at all. They will, of course, be allowed to do transactions in digital euros, but not to hold accounts. The digital euro accounts will have no remuneration, 0, which is not going to be an incentive for individuals to hold digital euros, perhaps not even to the level of the cap of 3,000 or less or whatever. Finally, and I think that's very important, the digital euro account will be linked with the individual's own bank account to allow what the ECB calls the reverse waterfall. In other words, if the cap of the digital euro account is 3,000 and I'm an individual holding 3,000 there, and I want to make a transaction of 10,000, through this reverse waterfall, I pull out 7,000 from my bank account, assuming I have that money in my bank account, and I can effect a transaction of 10,000 digital euros. So it should work smoothly. And even in a crisis scenario, let's remember that in 2007, 2008, the funds which left banks' balance sheets were not retail deposits, which remained remarkably stable, but rather wholesale funds and large deposits. And let's not also forget that we have deposit insurance up to 100,000 euros. So I don't think that fearing that people will get scared in a crisis and will move to limited amount digital euro accounts is viable. Now, what's the global landscape for central bank digital currency? I think the European, the euro area is somewhere in the middle of accepting digital currencies. There's only one relatively large economy I know of in the world which already has launched nationally a digital currency scheme, and that's Nigeria. Because the penetration of banks among the Nigerian population is very low, it is the central bank itself which deals with people, so bypassing the banking system, which obviously is not going to happen in Europe. There are a few large economies in a pilot stage, i.e. one stage ahead of the European area or of the euro area. China, Japan, India. In Europe, you have Sweden and Switzerland. But with the exception of China, I think that the others are not quite advanced compared to the euro area because they're still in the stage of debating if and how to implement a digital currency when the time comes. So there are a lot of scenarios, a lot of debates, more or less public. China, a few years ago, launched on a pilot base its digital yuan in 20 cities in China, and they're still evaluating the degree to which this is going to be a viable option going forward. I have no doubt they're going to adopt it, and also on the wholesale base so that they can effect cross-border payments in yuan on a global scale. In Europe, there's one country which refused to look at the digital currency. That's Denmark. A few years ago, the Danish central bank said that the low take of cash in the country doesn't warrant the cost of building up a digital kroner infrastructure. In the UK is slightly behind the Eurozone. The Bank of England is still in the phase of research and investigation, and there was no decision taken on whether to push ahead and propose and make public the debate about a digital pound. But again, I believe that that's going to come at some point. The US is far behind. The Fed is not convinced this is a good idea. Also, I think if a Republican administration and Congress will be in power next year, the idea of a digital dollar will really not be a priority at all, perhaps for a few years. I don't think that's good news for the strength of the dollar in global markets, but my personal opinion is that perhaps at some point in the US they'll think about a wholesale digital dollar to be used in global payments, and to postpone the discussion about the retail digital dollar for the US market. Again, with this heightened concern for privacy, which I found misplaced, because if you compare yourself with China, well, China would be big. The Chinese government will be big brother for its population, whether you have a digital currency or not. That's the nature of the beast, to say so. So I don't think that digital yuan in itself will change the dynamics of this process. And of course, that's exactly the opposite in the US. But I guess we have to wait and see. Now, regarding the option that some mentioned that perhaps we should do nothing and just ignore the existence of a central bank digital currency and move ahead with what we have, I don't think that's an option. Why is that? Because the digital euro avenue was starting to be pursued in reaction to the potential that private crypto money originating in the US, like stablecoin, will penetrate the European market and will become more popular in parallel with the fiat money issued by the central banks. So obviously, to counteract this penetration, and remember a few years ago the discussion that Meta, at the time Facebook, would implement a private currency, digital currency, got European regulators up in arms. So I don't think, because if you don't have the central bank digital currency in place, you may see the private crypto money used for transactions, perhaps not Bitcoin, which is highly volatile, but stablecoin, which is a little bit more stable, which is not an appealing proposition for European policymakers and regulators. Also, if you didn't have a digital euro, at some point, the euro itself would be at a disadvantage in global payments compared to other currencies. And also, you would not have perhaps this pan-Eurozone payment infrastructure, which I mentioned earlier. Now, when we speak about digital euro, it's actually only one element, and perhaps not even the most important, in the overall reshaping of the financial space in the digital age, which is brought about not only by digital advances, but of course by what I call progressive regulations in recent months and years, and forthcoming regulations coming from the European Commission to try to bring European finance to the digital age. And I have mentioned already PSD2 and the forthcoming PSD3, the revised payment services directives, then the forthcoming Financial Data Access, FIDA Act, and most recently the approval of the instant credit transfer scheme for the single euro payments area, SEPA, which is going to give a significant boost to instant payments across the euro area, across actually the European Union, without seeing high fees, which is the case now. So I think the landscape in a few years in European finance and banking will look very different from what it was only a few years ago, and maybe from what it is today, with the large pan-European payment schemes, including for non-banks payment service providers, which are allowed under the PSD2 and PSD3 regulations. And banks will clearly have to adjust and shrink their legacy structures. Those which do it better and faster and cheaper will be the winners. But again, this is not an issue solely related to the existence or non-existence of a digital euro. Artificial intelligence is a further catalyst here. I was looking at an interview of the CEO of Klarna, the large Swedish fintech, 1 week ago with some American media, and he mentioned that they did an internal study, and they realized that AI chatbots can replace 700 customer service representatives, which says something about the future of where the financial services industry is going. So in all these broader earthquakes awaiting the financial landscape, I think digital euro is only one element. Now, I mentioned some of the opportunities of the digital euro for banks regarding the pan-European platform and all these things. There are, of course, several challenges. I mentioned the fact that the competitive landscape is becoming more difficult, especially for those banks which are not fully prepared for the digital age, with the future penetration of non-bank payment service providers. And let's not forget that some of these service providers could also be subsidiaries, regulated subsidiaries of big techs from like Apple, Google, Amazon, and others. The challenge for banks to get rid as fast as possible of unnecessary legacy business, like heavy physical back office space, and capacity. The fact that perhaps some banks to incentivize clients to stay with them would have to pay more for deposits, which I think that in general it's a move which is long overdue. We saw European banks increasing loan rates in recent years with the higher rates, market rates prevailing, but we haven't seen the same movement in deposit rates. And I think it's depositors are long overdue getting better terms from their banks. The payment role of some banks will probably be disrupted. And I see the threat primarily for those banks with narrow franchises, which are based on transactional banking. Like if I use my bank only for small amount transactions, then of course I'm going to be more incentivized to look at the digital euro and not pay any bank fees, assuming that that bank charges me fees, which usually they do. And which can also move for some banks, which are more marginal, to a loss of customer relationships if the customer relationship is solely anchored on a transactional necessity. And first and foremost, in terms of challenge, is always cybersecurity. So the more the financial sector and the banking sector move into the digital area, the more the cybersecurity risk is increasing. I think I'll close here, and hopefully we'll get some questions.
Great, thank you, Sam, for that very interesting and insightful presentation. So as Sam says, please do type your questions into the chat box there, and we will do our best to answer them. So Sam, I've got a few questions here I wanted to put to you. Look, in a sense, the first one is actually even off topic, as it's not really about the banks per se. But you kind of referenced a couple of points. First of all, you said that one of the drivers of this project is European financials or EU financial sovereignty. In other words, an effort to prevent this takeover by crypto stablecoins, an effort to maintain competitiveness or the use of the euro in global trade, etc. It sounds like the driver is political first and financial second. Would that be a fair assessment?
Well, it's not only political, because if the euro, for example, in global markets, if euro is less competitive than other currencies, let's not forget that you don't only have the dollars, but coming from behind, you have the Chinese currency. You may have the rupee at some point, and India is quite advanced in the digital currencies. Obviously, Japan, maybe the UK will move ahead. So if the euro area stays behind, I don't think that's going to be good for the future of the euro in global payments. And as for as regards the euro area challenge of stable coins, yes, if there's no crypto equivalent of private crypto money, there's going to be a category of people who are going to start preferring using private money stablecoin. If you have the euro, the digital euro alternative, that sort of will crowd out the US originated private crypto money. So that's why, and that's actually a fact, that when the European regulators and policymakers saw the threat coming again a few years ago from Facebook with, if you remember, Libra, hypothetical currency which was killed in the bud. I don't think Facebook was in the right position to do that. And they woke up, and this project with central bank digital currencies came along, not only in Europe, but around the world. So I don't think it's only political, it's also economic and financial.
Yeah. Okay, that makes sense. And then just focusing then more specifically on the banks. You said at the beginning that banks are concerned that they could actually be disintermediated by the central bank or the euro system. Your perspective is, rather than being concerned about deposit flight, you think the digital euro is potentially reassuring for banks. Can you perhaps just in terms of deposits, but can you just expand on that briefly?
Well, I mean, first of all, if the ECB pursues its existing decisions, and there's no reason not to believe that, the digital euro holdings will be capped at the low cap, and there's going to be no remuneration. So it's not going to be interested for a European individual, say, to keep even 3,000 euros, digital euros, at the cap level with zero remuneration. So they'd rather keep that money in a bank, even with 1% or 2% remuneration. That's part of the individual money management. So I don't think that should be a concern for banks. But I think that banks in general, and I think that more threatening for banks rather than the digital euro would be this instant payments directive. Not that it's anything wrong with instant payments, uh, it's all good, but they have to adjust the systems. It's going to cost them a lot of money. They have to be prepared for them, because if, for example, Bank A is not capable to assure its customers of instant payments at all times, and Bank B can, well, the customers will go to Bank B. That's not the right approach. Or the competition in the open banking space coming from non-banks. So all these things should concern banks more than the existence of a digital euros, and the fact that you have this platform, digital euro pay platform, on which all banks in the euro area will have access, that should be viewed as a positive in my judgment.
Okay. There's a question here about, I guess they're quite specific. Let me put them to you, see how you fare with them. One question is this: what would vendors do with the digital euros received if they're prohibited from holding them?
Well, they just put them in their bank accounts. That's the same euro is in your bank account or in your digital euro account. There's no difference.
Oh, so it'd be like it'd go through the waterfall, though.
Well, you don't have a waterfall. If I'm a merchant and I get paid for my merchandise with digital euros, I deposit these digital euros instantly. I guess it's done instantly into my bank account.
Right.
The waterfall, the reverse waterfall, is only when you are an individual trying to purchase something from a merchant, and say you want to buy a car, and that car costs more than, say, 3,000 euros, and you get the money in your digital euro account from your bank account, assuming you have the money in your bank account, and that's called the reverse waterfall. So the money flows from your bank account into the digital euro account for you to make the payment in digital euros. Again, the bigger question here is, are people going to use digital euros in the future? And I think there was a survey done in Germany last year by Deloitte, and it turns out that the majority of older people, I hope I'm politically correct when I say older, I would be in that category, would distrust the digital euro, would rather prefer cash. A majority of younger people, like Gen Z and millennials, would be very happy with digital euros in the future. So I think critical here is the degree of take-up of the digital euro in future years. And let's say if this digital euro is introduced in 2027, I'm just throwing a year there, it doesn't mean that everybody in 2027, 28 will move to digital euros. It's going to take years, maybe a decade, maybe more.
Yeah.
So.
Okay. Sam, how could a non-euro area bank prepare for the digital euro? Could it serve as a PSP, as a medium in a non-EA country for its population?
Well, the PSD2 actually is not only for the euro area; is a regulation for the entire European Union. So even if you're in Sweden, you still have if you're a Swedish bank and you want to be a PSP in the euro area, you can do that. You can, I guess, set up a subsidiary in the euro area, and of course, if you're a bank, you probably are in the euro area already, whoever you are, but you can have a non-bank. You have, say, Amazon decides I want to participate in the, European, in the eurozone financial landscape. I set up a subsidiary, a payment service provider, regulated, authorized, regulated, and supervised by within the ECB euro system, and that provider, whether it's called Amazon Europe or whatever, can compete with European banks. But that's independent of the existence of a digital euro. The digital euro is basically has nothing to do with that. Even without the existence of a digital euro, even now, when PSD kicked in, that can be done.
Okay, one of the things that I think you referenced it in your wide angle, which is that assuming this project moves towards some sort of conclusion, we get a digital euro. I mean, banks are going to be faced with the issue of how to, I guess, productize the project. In other words, create a suite of services and products by open platforms that are going to emerge in parallel. It's a challenge for sure, but it's a huge opportunity too. Do you think, from what you've seen to date, are banks alert to the opportunities of creating a whole suite of digital euro based products and services?
Well, to be honest, I don't think they are putting too much thought into this right now. Maybe they do, but they don't share it, and there's no way for me to know what the strategic discussions, internal strategic discussions are. But I would hope that at least somebody in the bank would be aware of what's going on and would at least put it on the table. That's something, guys, that we need to talk about at some point in the near future. Definitely there are opportunities for banks, but again, opportunities would be mostly for those banks digitally prepared to participate in this new endeavor from day one. Because if you come too late, you'll meet not only the competition from other banks, but again, as I said, from non-bank payment service providers as well. And many of them are fintechs, subsidiaries of big techs. In other words, technologically very astute. And in the case of the big techs, as we know, they also have a huge privileged position on data, on customer data.
Yeah, no, for sure. I mean, I guess banks would say, they actually do say that given where we are with the digital euro project, they've got more immediate concerns: profitability, asset quality, economic growth, geopolitics, soft landing, hard landing, credit demand. There's a whole bunch of things out there. Do you think that's getting in the way of perhaps more blue sky thinking around digital euro opportunities?
Well, I think banks, like all of us, should be able to walk and chew gum at the same time. So I think they have enough people in the strategic area and risk management area to consider what's in store, not only in terms of the immediate concerns, but it's also true for the people who follow banks. And I'm talking about analysts, investors. For example, this week we have a large European banking conference in London, sponsored by Morgan Stanley. And based on what I've seen so far and from what I'm reading from presentations, there's zero interest and concern about any digital aspects of what the banks are doing, let alone about the digital euro. I would understand that. But at least about the new regulations, which are, creating open banking and open finance, practically no analysts or, investors express any major interest in that in discussions with banks, or the banks share that with, because they know that that's not something which is driving analysts concerned right now. I mean, the main concern is about capital buffers and commercial real estate and share buybacks and things like that, which is fine. But again, I think we need to move one step ahead and to be able to see where the banking industry is going, not only the next quarter, but maybe the next 3, 4, 5 years.
Yeah, that's an interesting point you make there about analyst and investor interest in the digital narrative. Look, I guess a lot of analysts' output is geared towards valuations and making recommendations, buy, sell, etc., etc. Do you think at this early stage, or let's call it intermediate stage of digital euro and broader digital developments, do you think it's possible to factor in valuation differentials between individual banks based on where they stand today and based on what they said about IT spend and visualization in their earnings reports, etc.?
Yeah, I don't think that only in terms of digital euros, but in terms of the digital preparedness of the banks and where they are in the digital advancement. Yes, I think that should be part of the valuation. But again, that's only if this is going to become a front burner issue. I remember 2 years ago, ESG continues to be a very hot issue, of course, but at the time it was a hot and also novel issue, something brand new, and a lot of analysts, tried, largely in false terms, in my opinion, tried to bring some kind of quantitative valuation of ESG into banks, into bank valuation. I don't think that that in time held much strength, analytical strength. But here you have it. Now it's less of a focus, of course. It will continue to be in the future, but perhaps with less intensity. And I think the same thing is going to happen with the digitalization, with all these aspects of open banking. Nobody's talking about open banking now. And yet, if you open a bank account in the UK, you are given the option with some banks of, bringing other banks' accounts and financial information into this open banking ecosystem that some banks offer. So I think that's coming, and it should be part of the analytical work that investors do in the future.
Okay, thank you very much. I just wanted to alert our viewers that you still have just a bit of time to answer questions. So we'll be closing in a couple of minutes. So if you do have any questions for Sam, please do type them in now. So I'm just going to perhaps ask you perhaps more of a personal question rather than a question about scope, which is, given where you stand and your analysis and your research into digital euros and digitalization, would your best guess be that after the period that you described at the beginning, that the ECB and the powers that be decide that the digital euro is actually going to happen? So are we going to get there? Do you see any roadblocks along the way at the official level that you think might, like Denmark did, maybe militate against the digital euro?
Well, I think the Denmark case is somewhat special because Denmark is a small economy with few banks, and with as they say, the utilization of cash is extremely low. So because the bank intermediation is close to 100%, there was no need to add an additional layer of a digital kroner. Again, Denmark is not part of the Eurozone. But I suspect that at some point, if Denmark decides to join the euro, they'll get the digital euro on a platter at that stage.
Yeah.
So that they should have the best of both worlds. But I don't think in Europe, we have to see what's going to happen with the European Parliament elections in June. If you are going to have hard populists in power in some of the major, at some point, I don't think it's going to happen this summer, but at some point in the next 2, 3, 4 years, like France and elsewhere, you could have a pushback against first of all, against the central role of the ECB and towards more national, more quote-unquote sovereign financial systems, and maybe the digital euro could be a victim. But again, these are political speculations, so I'm not very good at political speculation, so I'll stop right there.
All right. Look, to one question that we need to close, Sam, and
Sure.
it's kind of related to one something we discussed earlier, which is that people can't use cryptos because of the scarcity effect. So limited issuance versus high demand equals higher price, or due to distrust in the paper model, I guess the fiat money system. Why should they use digital euro at all?
Well, I don't think when you say crypto, think about bitcoins. I don't think bitcoins are. I think Bitcoin is a store of value. It's like an investment. It's a speculative investment. If you want to start paying with bitcoins, I'm not sure that you'll get too many merchants happy to get your bitcoins, or fractions of bitcoins. Now, if people are not going to trust crypto in general, that's a very good point. And again, I point you back to that survey done in Germany last year, when a lot of people, especially of more advanced age, distrust the digital euro, not because they don't trust the euros. They do trust the euro, of course, they trust the cash, but they distrust the idea of digital money, especially when it's known that it comes in a crypto form. So I think that's going to be generational. That's why I don't think that the acceptance of a digital euro, even if it's launched, it's going to be instant, or even not even remotely instant at the beginning. We have to wait and see how this will develop over probably several years.
Yeah. Okay, Sam, one question came just under the wire, and it's: do you expect digital euro to be more popular in countries with low deposit penetration, substituting cash rather than deposits?
Well, again, if you're going to have a cap on digital euro accounts, it's a very partial substitution. But as far as I know, most countries in the eurozone, in most of countries of the eurozone, the banks are deposit rich. So that's clearly the case in parts of emerging markets with low banking penetration, as I mentioned earlier. But no, in Europe, I don't think that's the case.
Yeah.
But that's what the ECB keeps saying. They say you don't need to have a bank account. If you don't have a bank account, you still have access to a digital euro account, which is fine, which is filling a gap. But again, in Europe, in Western Europe at least, this gap will be very, very small.
Yeah. Yeah. Makes sense. So Sam, let's close the session there. I think that we could go on for quite some time more, but I think in the interest of time and our viewers' time, we should close. I just wanted to remind you that if you wanted to download Sam's The Wide Angle commentary that he published recently, and the slide he went through as well, you could just click on apps at the bottom of the screen, and then you click on handouts, and then the two PDFs should or will appear, in fact, with a download button against them. So if you do that now before we close, you can download the Wide Angle and Sam's slide. So while you're doing that, it just remains for me to thank Sam so much. Thanks, Sam, for a fantastic session, incredible insight there, a very exciting time. And I guess this subject will carry on evolving. So as and when appropriate, perhaps we can revisit. I'd like to thank our viewers for watching and staying till the end. I hope you found that useful as well. We do these sessions on a fairly regular basis, as and when themes evolve and we think they're appropriate, right across the franchises, so not just banks, but also sovereigns, corporate, structured finance, and project finance. So that's it. We'll end it there. I wish you all a very successful and fun rest of the afternoon, and we'll see you next time. So goodbye from us.